What is up, though, boys? I'll be going over my trading recap from today. So, to start off, let's scale to the higher time frames. So, let's go over here, remove executions. All right, so basically, if we go to the 4 hour, right, we see that we are overall, okay, so to begin, right, let's just mark up market open. So, um, all right, so start market open here. And on the 4 hour, we see that we actually turned bearish. So like I said to you guys, right? 2 videos ago and 1 video ago, I pointed out this BPR, this fair value gap right here on the higher time frame, the 4 hour. And I said that, all right, so we see this, we see that we are retracing to this 4 hour fair value gap. What I'm expecting is to get a reaction to the downside and then ultimately get a retrace into this BPR fair value gap and then get a movement back to the upside. And after this, I told you guys, like, I really think we're going to continue on an uptrend to target liquidity here and liquidity up here. I genuinely think that we'll continue on an uptrend. And so yes, we were bearish on the 4 hour, and but I was still willing to take longs for the day simply because we had already retraced into these higher time frame imbalances. So on the 4 hour, we're bearish. As we can see, we broke structure back, but I'm willing to disregard that for right now. And after this, we see a solid break of structure back to the upside, right? And so obviously I marked out my higher time frame draws and liquidity. Obviously right here we can see this got completely disrespected. And I think on this one we started to see some sort of a reaction. We formed this 1 hour fair value gap. I would have liked to see more of a retracement to this. And so we see these draws on liquidity, and we see nothing here. This gets completely ran through. And then we have this draw on liquidity up here. And essentially we do get a break of structure to the downside, but we don't really get a solid retracement into equilibrium or anything. I really don't, or maybe I'm just in class or something. I don't know what ended up happening here. I remember we had some sort of, I think maybe a 15-minute imbalance I was looking at or something. I can't really remember why yes, we see this 15-minute imbalance. I saw kind of like reaction, like not closure above it. Oh, but this was actually the play from today now that I think about it. So let's go ahead and get rid of all this. So this was actually the play from today. So if we look at this 15 minutes imbalance right here, we see, yeah, we get a wick and then we don't close above it. Yeah, we get a wick here, go down, wick, wick, wick. However, when we close on the 15-minute above this, I'm willing to enter after we get a retracement back into this. So essentially we get the 5-minute retracement, I think it was a 5-minute retracement. So we close above, we get a retracement back in, and from here I'm just honestly looking for a 1-minute break of structure back to the upside. And so after we get the retracement and whatnot, right? Yeah, it was a bit choppy here, but it's whatever. After this, I'm simply just looking for a 1-minute break of structure back to the upside. So these highs don't get closed above these highs. This is our highs that we're looking to break structure on. We get another retracement testing this fair value gap again, or I guess the inversion of the fair value gap. Um, and then we do break structure on this candle to the upside. I enter right here, and my first take profits, as I had showed you guys, I had 3 contracts, and so I entered 1 contract, and then I realized I wanted to enter 2 more. So this is what those 2 errors are. I got a solid fill on this, and then I ended up taking 2 contracts off right there. So as you guys see, sell 2, and then on this right here, and then I had one more left in there as a runner, targeting buy side up here. As we can see, yeah, we haven't hit that yet, so that's something to definitely keep my eye out on. And honestly, I think so. Basically, my take profit, like you guys know, I never keep it all the way up here. So what I think I'm gonna start doing is whenever I see huge wicks like this that create a high, I think I'm just gonna take it off of where the body ends. So in this case, right, it's a bullish candle right here. So where this white body ends, right, this is probably where I'm gonna take it. I'm probably not gonna want to target all the way up there. I think eventually we will hit that. But one thing I've been looking at is sometimes we get movement to the upside, but then we end up coming down as a retracement on the higher time frame, and then we ultimately end up sweeping liquidity. And so I usually just like to keep my stop loss or take profit a little bit below. And as we can see, if I were to have had it like right here, right, for example, right, I would have had it probably like down here or something. I had my last take profit like somewhere within this range. We would have hit it. However, right, we had a stop loss right here. Eventually, we would have hit it, but we had a stop loss down here, and the stop loss was below a 5-minute fair value gap. So stop loss was below a 5-minute fair value gap. Let me find that for you guys. That was yesterday's trade. Okay. So as we can see right here, we have this 5-minute imbalance right here, and take profit, or sorry, stop loss was below it. We end up just simply coming down. It was a pretty good risk to reward on the first one, almost a 1.2, but um, we did end up taking profit today, even with getting stopped out on our last contract. A little bit upsetting, but also main thing I wanted to point out for you guys, big thing. Obviously this is not financial advice, but this is something that I'm gonna start doing in my trading, which was, we saw this yesterday, for example. I ended up losing or breaking even, I think, because of this. Um, so if we simply, so we're on the 1 minute here, 5-minute here. Okay, so if we go on the 5 minutes time frame on Nasdaq or S&P, right? So at the same time, right, that we ended up coming into this imbalance right here, we did not end up closing above this imbalance. I had told myself if we end up getting an inverse to this fair value gap retracement, I'll be willing to enter another contract. We did not end up getting that, but we have to take into account this liquidity right here. Wait a minute. So we were sweeping liquidity. Okay, yeah. So we had high time frame, I think 4-hour liquidity right here. And at the same time that we were getting this retracement into the fair value gap, or whatever this was, it was like a 15-minute fair value gap that I ended up taking profit on. As soon as this happened, we were sweeping high time frame liquidity on S&P. And so I think what I'm gonna start doing is, say we're sweeping 4-hour liquidity on Nasdaq, right? We're in a long position in S&P. S&P's our lagging index. If we're sweeping high time frame liquidity on Nasdaq, it is pretty high probability that we'll end up getting a move to the downside on Nasdaq. And since the S&P and Nasdaq sort of kind of go on the same price movement somewhat, if we end up getting a downwards move on Nasdaq from sweeping 4-hour liquidity, that's probably also going to happen on S&P. Today it was S&P was our leading index, sweeping 4-hour liquidity. Obviously, Nasdaq falling behind on yet sweeping it. But if we see 4-hour liquidity sweep right here, selling pressure to the downside, I was considering, because of yesterday, selling all my positions right here. But I was like, you know what, fuck it, we'll leave it. It was a mistake, or not really a mistake. It was just a lesson learned. But I think it's definitely something that I'm gonna keep in account, that if I'm in a trade in my lagging index, then I'll probably, and we're sweeping like high time frame liquidity on the other index, on the leading index, I'll probably just close out my position on the lagging index to just play it safe. And so that is something to keep in mind, something I'm going to start doing in my trade to see how it goes. But yeah, boys, that's basically just it for today. Just a quick trading recap for you guys. Appreciate you boys watching. I'll see you boys in the next one.